Hello, everyone. My name is Zulfiqar, and welcome to Income Investors. Today with me is John Whitefoot. But before we go into any details, understand that anything you hear in these videos is for information and educational purposes only. No matter how safe an investment sounds, it comes with risk. To learn more, see the description below. One of the best investment strategies I've learned is to sell shovels when there's a gold rush. Let me explain a little bit. When there's a gold rush, a lot of people are actually looking for gold, but what they need is to look for gold, they need shovels and picks. The person who sells shovels and picks could actually make more money than anybody who's looking for gold because odds of finding golds are very low. With this said, let's talk about energy a little bit. For the past 2 years, it was one of the best performing sectors out there. And it looks like 2023 will be similar. Recently, OPEC Plus did a surprise cut to oil production. They're planning to reduce their production by 1.16 million barrels per day. Keep in mind that in November, they did a cut of 2 million barrels per day. And with oil, with production cuts and economies remaining similar, this creates a pressure for oil prices to go higher. And recently, as soon as OPEC Plus announced a production cut, oil prices spiked higher. What's ahead for oil prices? Crestwood Equity Partners LP. And John, if you want to go in and explain a little bit about what they do, and we'll go on from there.
Yeah, thanks, Mo. Crestwood is a master limited partnership that owns and operates an extensive midstream assets located primarily in the Americas oil and gas breadbasket, and that's North Dakota, Montana, Wyoming, South Dakota, West Texas, and New Mexico. Now, as a midstream company, Crestwood is engaged in gathering, processing, treating, storage, transportation, and terminaling of natural gas liquids, and crude oil. It's basically the toll operator. If you're a big oil and gas company, you drill oil, but you needed to get somewhere, so you go to the pipeline companies and terminaling companies that store and everything else. Everybody looks to Crestwood, including Exxon, ConocoPhillips, Shell, Marathon Oil, Total, any of the big energy giants. They have to use their pipeline system and storage and terminaling system to get their oil and gas to where they want it to go.
Could you say that Crestwood is one of those, shovel and pick seller in this gold rush that's happening in energy market?
Yeah, absolutely. Like if you're Exxon or a pure play or another different pure play oil and gas company, your earnings are based on where supply and demand of oil and gas prices can go up and down.
Right.
Whereas if you own the pipelines, again, you're the toll operator.
Right.
So you have to use that. Crestwood has its contracts. Some of them are you pay no matter what, whether you use them or not. They have inflation escalators built into them that's tied to the consumer price index or the flat annual fixed increase. Of its contract type, 15 are tied to variable rates and 85% are tied to fixed fee or take or pay contracts. So they make money regardless of whether or not you use the pipeline because you're just paying for the privilege. And on top of that, they increase their fees, sometimes up to 6 or 7% a year, like any good landlord would. So
right.
It's baked into the system. So yeah.
Now let's talk about their financials in 2022. I assume they had a great year.
Yeah. Their full net income increased to 72.5 million from a loss of 37.4 million in 2021. Full year adjusted EBITDA grew 27% to 762.1 million, and distributed cash flow jumped 25.7% to 466.6 million.
Wow, those are some huge numbers. And how are they treating their shareholders? Or I should say unit holders, because it's a limited liability corporation. How are they treating them? What's a dividend like?
The distributed cash flow, which is where the dividends come from, again, jumped almost 26%. So the cash flow is like massive right now. They're like printing money. And it's been helping them provide a reliable, ultra high yield dividend. In January, it declared a quarterly cash distribution of 0.655 per unit, or 2.620 on an annual basis, for a massive ultra high yield dividend of 10.5%. Again, inflation is running at just over 6%, so that's not quite, but almost twice the inflation rate. And that anomaly, that high dividend payout, isn't an anomaly. The 5-year average dividend yield is 10.62%, which was thumping inflation 5 years ago.
Yeah.
So that means even during the pandemic, a period during where some companies were suspending their payouts, Crestwood is actually increasing its distribution and giving its unit holders a raise. And it's also important to realize that if you look at its share price, it actually hasn't like been on fire since the start of 2021. It's been trading in a relatively tight range. Okay. But that's also a positive indicator, because it means that even though maybe the oil and gas industry is going like this, its share price is like that. So yeah, it can provide a reliable high yield distribution during times of volatility, and its share price provides underlying strength when the markets turn bearish. So you're sort of getting like the perfect marriage with Crestwood: inflation, thumping dividend, and a reliable share price right now.
Thank you, John, for some great insights on Crestwood. For our viewers, if you want to know more about Crestwood, they're traded on New York Stock Exchange under symbol CEQP. You could also just go to our website, incomeinvestors.com. Lastly, don't forget to like this video and subscribe to our channel.